Okay, welcome back to my channel. In this hour, I will reading an article by Amber Weirix, Investing.com. The Philippines peso fell the most among its Asian peers on Tuesday, after the country's second quarter GDP rose less than expected, while the most other regional units more later ahead of key US inflation data. As of the 2300 ET 0301 GMT, the USD or PHP fell 0.4% to 55.585 against the dollar. Government data showed that the Philippine economy expanded by 7.2% in the second quarter, below analysis expansion of 8.6%, but the readings was still within the country's official growth target, but lower than expected. A reading may see the Philippine Central Bank lower the magnitude of its interest rate hikes this year as the struggles to combat runaway inflation. Data last week showed Philippines CPI inflation rose more than expected in July amidst a heated inflation and rising interest rates are likely to weigh on economy growth in Southeast Asian economy, among other Asian Pacific currencies. China's yuan and Japanese yen and the Australian dollar moved barely 0.1% in either direction against the greenback. The US dollar index was muted Tuesday, while dollar index futures also moved little ahead of the key CPI reading on Wednesday. Analysts are expecting an annual reading of 7.87%, down flow at the 7.1% rate seen in June, while the reading will likely indicate the US inflation has peaked. Customer prices will still be pinned to their highest level in 40 years, given that the Federal Reserve hike signaling data drive opposed to adjusting interest rates for the remainder of the year. The reading is likely to factor into their September meeting. Several Fed officials had signaled last week that more policy tightening is required to combat red-hot US inflation. In Asia, investors will also be looking to China's CPI figures of Wednesday to judge the full impact of the recent COVID-19 lockdown of the economy. Consumer price inflation, the world's second largest economy, is expected to have risen slightly in July, while producer price inflation is set for a sharp decline. Before on week in Asia, investors will also be looking to China's CPI figures on Wednesday to judge the full impact of recent COVID-19 lockdowns on the economy's consumer price inflation. The world's second largest economy is expected to have risen slightly in July, while producer price inflation is set for a sharp decline the year after, will the reading will likely instate that. Okay, that's all my article. Maybe you can understood. You're welcome.